It is now 4 p.m. on December 11th Beijing time. Last Friday, the video recommended long positions in EURUSD below 1.0723. The lowest price after the issue was 1.0725, which was 2 points short of the entry point. The exchange rate rose to 1.0785 ahead of schedule, with a cumulative increase of 60 points. A signal that is in the right direction, but barely missed entering the market, is not a valid signal. Then there is gold. Last Friday, it was recommended to go long below 2010. Affected by the unexpectedly better than expected U.S. non-agricultural data on Friday night, the gold price was as low as 1991, triggering the stop loss of 1995. The current market is too sensitive and quick to bet on the Federal Reserve's interest rate cuts and interest rate hikes. Market volatility and risks have been amplified accordingly, and it is necessary to participate with light positions. However, the Federal Reserve's decision early this morning will give the market a clear contact. Although the stop loss was triggered by the intraday order, Laudi's team has been operating market execution orders and EA-programmed trading in EURUSD every day. The principal of Laudi's main account is $200,000. From October 1st to today, the cumulative profit is $97,330. By the end of the month, the profit rate for the first quarter and the whole year can be calculated. The account's historical records and the real-time operation process have been publicly disclosed for more than 3 years. If interested, can contact me to learn the password. The initial funds under custody range from $5,000 to $200,000. Observe what suits you and then consult as needed to choose a cooperation model. How to operate today? Let's look at EURUSD first. Last week, the U.S. non-farm payrolls and the unemployment rate exceeded market expectations. Although most of the data was considered to be distorted, the U.S. dollar and the U.S. bond yields rebounded. The decline slowed down after testing as low as 1.0725 in EURUSD, so funds are still waiting for the U.S. CPI data to follow this week. The Federal Reserve's resolution is implemented. A single data reference is of little significance. Multiple observations are needed for reference. The support below 1.0720 to 1.0680 is still valid. It is recommended to go long at 1.0713 to 1.0650 during the day, with stop loss at 1.0638. Gold was also dragged down by the non-agricultural data, with the lowest price reaching 1991.2. The gold short orders that entered the market in 2010 last Friday triggered the stop loss of 1995. The US 2000 level is the key to this rise. Being able to stabilize also means that even if the Federal Reserve remains unchanged at this week's resolution and the interest rate hike expectations do not rise, the future turn of the US dollar index will still be mainly bearish. During the day, it is recommended that gold wait for light positions at 1983 to 1979 to go long, with stop loss at 1968. In addition to Europe and gold, 2 to 3 products will be selected from the 5 targets of GBP, AUD, GPY, silver, and crude oil, including their supports, resistance, and directions will be given for reference. The upper part is last Friday's signals review chart, and the low part is today's point of view sharing. But it is only recommended for traders who have a certain short-term trading basis. The target point is not placed on the video. Laudi will also watch the market trend and notify more accurate selling tips in the group. Scan the QR code on the top of the screen for cooperation consultation, and contact me. Finally, I will give you a famous quote from Charlie Munger.